January 12, 2026. Financial markets around the world showed signs of renewed stress on Monday as U.S. investors digested an unprecedented escalation in the conflict between President Donald Trump and Federal Reserve Chair Jerome Powell. The Dow Jones Industrial Average and other major indexes saw futures weaken sharply, the U.S. dollar slid against major currencies, and safe haven assets like gold surged to all-time highs, all on concerns that political pressure may be seeping into the heart of U.S. monetary policy. Powell's bombshell. DOJ subpoenas and threat of indictment. In a rare and highly charged address, Fed Chair Jerome Powell revealed that the U.S. Department of Justice had served the Federal Reserve with grand jury subpoenas connected to his testimony before Congress last summer about a $2.5 billion renovation project at the Federal Reserve's headquarters. Powell said the action included threats of a criminal indictment and characterized the legal move as a pretext intended to pressure the Fed into cutting interest rates more aggressively, contrary to the central bank's independent judgment. Powell stressed that the subpoenas were not genuinely about oversight of the renovation work itself, but rather a broader attempt to influence monetary policy. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president, he said. President Trump, who appointed Powell in 2018 but has been increasingly critical of him, denied knowing about the investigation when asked in an interview with NBC News, even as he continued to criticize Powell's performance. Market fallout. Stocks, dollar, bonds on edge. The threat of legal action against the Fed's top official reverberated quickly through markets. U.S. stock futures fell sharply. Dow futures were down approximately 350 points, about 0.7%, S&P 500 futures slipped around 0.6%, and Nasdaq futures declined close to 0.9% as traders reacted to the uncertainty. The U.S. dollar weakened against major world currencies, reflecting concerns about the currency's safe haven appeal being eroded by political risk. Gold surged to a record above $4,600 per ounce, as investors crowded into traditional hedges against economic and political instability. Treasury yields climbed, with the 10-year rate moving up toward 4.2%, suggesting bond markets were pricing in a degree of risk and uncertainty around future monetary policy. Analysts described this renewed "Sell America" trade as similar to episodes of stress seen in prior years when investor confidence in U.S. leadership or economic policy was shaken. Concerns over Fed independence. At the core of the market reaction is fear that the legal pressure on Powell could undermine the Federal Reserve's independence, widely considered a cornerstone of global financial stability. Investors and economists warned that politicizing the institution's decision-making on interest rates could have far-reaching effects on inflation expectations, bond markets, and international confidence in U.S. financial governance. Goldman Sachs and other major financial institutions have specifically flagged the criminal probe as a threat to the central bank's credibility, suggesting that markets may begin to discount the Fed's ability to act calmly and based on data rather than political winds. Political fallout and institutional integrity. The conflict has also spilled into Washington. Republican Senator Thom Tillis publicly questioned the Department of Justice's independence, vowing to block any Fed nominations, including Powell's potential successor, until the matter is resolved, a move that could complicate leadership decisions at the central bank. The DOJ's official stance emphasizes its mandate to investigate any abuse of taxpayer dollars, even as critics say the timing and target of the subpoenas signal deeper political motives.